All right, stocks fell across the board today after President Trump threatened a new 35% tariff on Canada. In an open letter to Canadian Prime Minister Mark Carney last night, Trump cited the flow of fentanyl as part of the reason for the rate, writing, quote, "If Canada works with me to stop the flow of fentanyl, we will perhaps consider an adjustment to this letter." Now, Carney responded on X, writing in part, "Canada has made vital progress to stop the scourge of fentanyl in North America. We are committed to working with the United States." And joining me now, I should say, is CBS News contributor Javier David. He's also a business editor for the Dallas Morning News. Javier, great to have you on. I love what the Dallas Morning News does. So we've seen constant changes in the Trump administration's tariff policy. What does the market reaction tell you about how investors are feeling?
Simply put, investors aren't scared enough, weirdly enough, of tariffs to stop buying stocks. Risk's appetite is as high as it's ever been. We have the VIX, which is kind of Wall Street's fear gauge. It collapsed back in April, but now it's sort of, at those lows again. We've had a week of unpleasant surprises. We've had the 50% tariff on Brazil. We now have this 35% threat of a levy on Canada. Who knows what next week will bring, but it's rather odd to see stocks kind of perched near these record highs, even though we gave some of that back today. But broadly speaking, the market really routinely continues to underestimate tariff risk. The threat waxes, it wanes, and depending on the day, it diminishes, but it's like a lot like inflation, it never fully disappears.
Front of mind for us are the businesses that are no doubt going to be impacted by any additional tariffs. Canada is one of the country's largest trading partners. How significant would this 35% tariff be for U.S. businesses if it were to take effect August 1st, as the president says?
Well, Canada has at least one benefit going for it, in that we're still part of the U.S. Mexico Canada trade agreement. So some of the problems associated with higher tariffs are limited. But the bottom line is, like, companies that deal a lot in Canada, or like have either large markets in Canada or a presence in Canada, they just need to be prepared to pay more. And that means that they need to get ready to roll those or pass those costs along to some of their consumers. Even if they eventually get rolled back, they have to make plans for them now. So that's part and parcel of the unpredictable nature of this tariff policy and the impact it really has on consumers and businesses. It complicates the outlook, and it really makes it hard for the Federal Reserve to deliver these rate cuts that the president has adamantly demanded that he wants, but the central bank kind of steadfastly insists it needs to wait on. And a big part of the reason why is because tariffs are taxes, and taxes are inflationary.
Javier, it's not just Canada that's facing this August 1st deadline. So what other deals are U.S. investors looking out for when it comes to several other countries that are also facing that deadline?
Yeah, I mean, it's not looking terribly encouraging on other fronts as well. We've got Japan and South Korea next in line. India's had talks. They've been slightly less bumpy, but the Japan and South Korea talks have been sort of a sticky widget. And all three of those countries are fairly close allies. So the fact that there's nothing inked yet is not really encouraging. And it likely means that there's a very real possibility that everyone on both sides are going to have to brace for higher levies at some point.
Yeah, certainly something we're going to be following very closely in the days to come. Javier David, thank you so much for your time and insight.
Yeah.